So we talked about valuations a little bit, and they have certainly been a concern for a lot of people over the past few months. But what this chart shows is, maybe we're seeing a little bit of good news here. So at the peak where we had this year, you had trailing 12-month PE ratios north of 30, which is almost astronomical levels, and certainly not a good starting point for future returns. But since then, we've had stock prices continue to move, we'll say sideways or higher. But you've had these PEs drop significantly, basically because the earnings side of this is getting better. So if you think about price maybe staying the same, but earnings growing significantly, that number is going to come down quite a bit, which it has, right around 26 right now, still well above the 10-year average here in blue, and above the 5-year average here in green. But we're certainly moving in the right direction in terms of valuations. And I know that's been a big concern of a lot of people, saying, hey, we can't sustain this market at valuations this extreme. But the situation is improving there as earnings have rebounded pretty well. Now, as we look at the global landscape for valuations, we see a theme that's been in existence for a while now. So if you take the dark blue line here representing the S&P 500 or US returns, and then the lighter blue line here representing, we'll call it developed international, and then you have the orange line representing emerging markets, what we see is the valuations outside of the US continue to be more attractive than the US. And it's, you go back to 2011, it's kind of ebbed and flowed a little bit, where the valuation differences have come closer, then they've spread out a little bit. But here is one of the biggest gaps that we've seen since this chart started back in 2007. And I think the frustrating thing for a lot of folks is that this should portend good returns for international versus US. But unfortunately, it has not played out that way over the past decade. And the setup is certainly there, and we still believe that there's a place for international equities in clients' portfolios, and partly due to this chart right here. But I think until we can see some sustained performance for international versus the US, we're not going to be as willing to maybe lean into our international exposure as much as this chart might indicate that we should be thinking about. But I know this has been a sticky subject for a lot of folks over the years. But when we think about valuations and reasons to invest in international, I think this is as good a chart as any to show that differential.